Hi everybody, it's Monday. We're on the floor of the New York Stock Exchange with Jim Cramer to break down today's market action. Jim, let's start off with the 10-year Treasury yield at 2.7%.
Everyone's sweating the program there. I think we have to recognize we got a good economy. And you know, when it was at 2.4, people were saying, wow, I'm scared about the economy being too weak. Now at 2.7, you know, it should go to 3. We need some inflection. We need the banks to be lending and make some money. We need the treasuries to be reflecting the economy. Now, a lot of the problem with treasuries is it's reflecting overseas. I mean, so you have a lot of money coming in here rather than, say, Germany or Italy or France. But, you know, get used to it. That 10-year's going higher in terms of interest, and that's because we may have an economy that can do 4%. I'm, of course, a bottoms-up guy. I am seeing from a lot of the companies just that report already some tremendous cycles, like the aerospace cycle, the defense cycle, they're very, very big. Housing cycle, very big. There is oil and gas cycle, very big. These are gigantic when it comes to this U.S. economy. And I think people in the Northeast don't see it. They don't see the cranes. I had Brian Jordan, I had the CEO of First Horizon on. He said, come to Nashville. You won't believe it. The economic growth in Tennessee. The economic growth is not taking place in the New York City area, but it is taking place around the country.
And so many macro events this week that could affect the 10-year yield. Fed meeting, jobs numbers this week.
Yeah, these are all going to be strong. A lot of people talking about Janet Yellen being a hawk. Janet Yellen accomplished something. She kept rates down until the economy caught fire. That's the critics who wanted her to do things years ago, they would have been wrong. There's nothing the matter with admitting that somebody just got it right. She got it right. Bernanke got it wrong initially. He got it right. And you know, look at this. Look at what we have here. We got a great economy.
Her last Fed meeting this week. We'll be watching that.
Yeah, she did a good job.
Meanwhile, Jim, a big merger today. Dr. Pepper Snapple and Keurig Green Mountain.
Yes. Now we had Bob Gamgord on, who I've known for years. You know, he worked at Major League Baseball. A lot of people feel he turned it into a business. He worked at Pinnacle. He created a fantastic consumer products company. He worked at Mars, where he did a fantastic job, and now he's putting together, think about Mars, worldwide company. Now he's putting together the ultimate consumer products company, packaged goods, and the packaged goods business, it's one of the better growers. You're going to get a piece of it if you buy Dr. Pepper. I would not sell Dr. Pepper. If I owned it, I'd take the piece. And it's a remarkable. Larry Young is great at Dr. Pepper, but Gamgord has put together a company you want a piece of because Keurig is growing like mad. Keurig was poorly managed. Gamgord is a great manager, and when Gamgord also, you know, my wife's on the board of Bucknell. He was head of Bucknell's board, and I've just followed his career for a long time. He's stand up, and I can't believe that now you're lucky enough to get a piece of the company that he is running. Keurig Dr. Pepper. So it's just a rare opportunity. Don't sell. When it came down, I was saying buy. People don't understand the value here. It's a stub for the ultimate consumer packaged goods company. Better than Unilever, better than Procter, better than Colgate. Not as good as Estee Lauder, which is my fave. It's going to rival PepsiCo even. Although PepsiCo's putting up great numbers, that's an actual alert name.
Dr. Pepper Snapple shares up 30%. I assume you think that's justified.
Yeah, I mean, it's really remarkable. I think that, you know, people have wanted a piece of Keurig Dr. Pepper, and now you have it. And I think you're getting a piece of a company. You know, sometimes people have to understand managers are great, and Gamgord is just fabulous. And everyone in the industry knows it, because everyone has seen what he's done. And Pinnacle was great. I remember when Pinnacle came public, I interviewed Bob, and I told people this is the one to buy because it's Gamgord. And what you're doing is buying a great CEO. And I think people do not understand that a great CEO is somebody sometimes you really want to be affiliated with. I talked about that in Get Rich Carefully. And some of the execs I picked were great. Some didn't pan out. It's going to happen. They had a run. And then I think that if you look at the book, you'll see why I recommended them. Gamgord's in that group.
Jim, meanwhile, we're awaiting the future of Steve Wynn of Wynn Resorts.
Yeah, now that's a tough one. I have a real money piece about how I just don't think you can own it because I think that that Steve Wynn, we were talking about Gamgord, Steve Wynn's the company. So if Steve Wynn steps away, That's trouble. If he stays, look at that Massachusetts Gaming Commission. That's an independent group of people. He has a giant casino that's going to open. Will it not open? That would be unbelievable. I remember a couple years ago when Wynn had a fight with the People's Republic, which is unbelievable that he fought with them and he won. I think Wynn's amazing. Now, obviously, these allegations are terrible. So what they do is they change the coloration of the situation, and a lot of times you're considered guilty till proven innocent. But on these particular allegations. But I will tell you that in terms of operators, there's none better than Wynn. If he steps aside, you better hope that the company gets a bid.
Yeah, you're talking about a sale.
Oh, yeah. And, will they? Will there be a Chinese entity that comes in and buys it? I don't know. But there has to be somebody, because if he steps aside, I don't see a number 2 there that can run it. Although I know he's groomed people, and this is a credit to Steve Wynn. He's been one of my heroes. Now, obviously, the allegations make it so it's hard to say that if it turns out to be true. And obviously, you hope that it isn't if you're a fan of Wynn. But facts are facts. And if he has to leave because of, say, the Gaming Commission Massachusetts Gaming Commission not letting him go on, and I go back over the makeup of that committee, I went over them. They're not going to just say, hey, listen, we're going to look the other way. They're going to do the opposite. They're going to say, listen, we're not, I believe they're going to say, they said it's troubling. They put out a statement today after what I said on air. And I think that they will be, they can block it and block it and insist that Wynn resign. And if they do that, stock goes down, and then you have to hope that a Chinese company buys, and that's a lot of things. Now, I like MGM. That's Jim Murin. He's been fabulous. I've liked Wynn more than Las Vegas Sands. I don't know. My real money piece, I conclude, too hard. It's too hard. And I don't like battlegrounds. I talked about Starbucks this morning. That's a battleground. When I say battleground, it means I can understand both the bull and the bear. If you understand both the bull and the bear, then you look for another stock where you only understand the bull and that the bear doesn't make sense. Like Gamgord and the new Keurig Dr. Pepper, which I really like.
You mentioned Starbucks. Let's talk about that Bernstein downgrade of Starbucks, saying that China acceleration isn't necessarily enough to outweigh U.S. deceleration.
Okay, so here's the, we sold Starbucks at a very opportune time for action alert. And it's always difficult because Howard's done a remarkable job, and Kevin Johnson's following suit. Now, the U.S., there are big issues in America about traffic, not just for Starbucks, but for everybody. There is a propensity to, they've got mall stores. Now, Howard had always felt that mall was so small that it couldn't hurt them, and that was not the case on this conference call. Kevin Johnson called it out. But, people just walking, people going somewhere. We're in a stay-at-home economy. So, it's affecting everyone. They're still they're doing a miraculous job. They're taking share. They're doing all the right things, taking share globally. China is fabulous for them. I actually talked about the idea that maybe they need to do what Yum did, because Starbucks generates a huge amount of cash. Yum China, Starbucks China, that's the growth, and then the rest could be a great dividend stock. Well, Yum China, Yum has brought out a lot of value. They don't want to do that, and I put it out there, but only because Starbucks China, you would pay a multiple that is so much higher that you would be shocked at how much value there really is. They have to stop the decline in the U.S. They have to. And if they don't, the stock will be, the multiple will shrink, and you'll pay less and less, which is one of the reasons why we had to sell it. It was painful to sell, made some money. Painful to sell because I've been behind it ever since Howard Schultz came back. But we have to be very, very careful here, because there is a decel in U.S., and the accel in China right now can't offset it.
All right, we'll watch that one, Jim. Meanwhile, who do you have coming up on Mad Money tonight?
I have American Electric Power. This is important because the utilities all trade together. I understand that. People periodically say what utilities to buy. I say AEP, I say Dominion, I say Con Ed. Those are the ones that I have on quite regularly. They're all fabulous growth utilities. I usually ask American Electric Power, how's the economy? Because they have such a swath of the economy, and they're in boom areas. So stay tuned for that if you want to know how the growth of the country is.
All right, that's tonight, 6 p.m. Eastern on Mad Money. Jim and I are going to continue the conversation on actionalertsplus.com. Please join us there.